How we doing, traders, and welcome to the SPACs Attack. Let's get it started. All right, traders, welcome to the SPACs Attack, guys. How we doing? I got my main man, Chris Katje, in the house. You already know. Say hello to Chris. How we doing out there? It's going to be an exciting week. One of the things is, I've really been starting to try to get that portfolio going here. So some of these I'm going to be really trying to get under my belt in the next couple of weeks. One of the things I've been talking about is building that portfolio in the SPAC game. And so I'm looking at those that are really close to that $10 to $11 price point to really kind of create a complete diversified portfolio in these. I'm looking at maybe 10 to 20 SPACs. So just to give you guys an idea kind of about the number of SPACs that I think can get that diversity. So that's what I'll be looking for. I'm looking either to 10 to 20, and I'm going to separate a certain amount of capital in each play. I'm not going to go and then try to load the boat in one particular play. What I'll do is I'll split out the percentages in all of them and hope to see a gain. What do you think about that approach, Chris?
Yeah, I think that's an excellent approach, as you build out that portfolio. So I'm looking forward to hearing, what kind of specs that you add to that new portfolio going forward.
Yeah, definitely. It's going to be really fun, and I'll let you guys know as soon as I start adding it up. I'm gonna start bringing it to the show little by little. One of the things is that I'm not doing this so you guys can copy me or I can look like I have a big winner. At the end of the day, I'm doing this because I'm starting to get informed, in these trades, and I feel like I can finally start catching with the story, the technicals, and the fundamentals. A lot of the fundamentals come into play after the merger vote, and so that's when I kind of pay attention to that kind of watch. But definitely, we'll keep these on watch as we've been seeing a bunch of them kind of come back and push back up. All right, Chris, I know that you've been seeing a lot of moves. Want to give a shout out to some of the viewers that definitely are here early. Adrian, True, Lynette. We got Caro in the house, Luca, Edwards. This is what we're here for, guys. So definitely smash the like below, hit the subscribe, and let's get into the headlines.
All right, guys. Yeah, so mostly green out there with SPACs trading higher today, looking real good. So big story today is IPOC. So that vote is set for today. Merging with Clover Health. This is a Chamath Palihapitiya backed SPAC. It's been one we've talked about for a while. We talked about this when it was trading at $10 before that date was announced, but they had that agreement in place. So shareholders of IPOC are going to own 18.7% of the new company. And in a surprising move, shares are actually going to move from the New York Stock Exchange over to the NASDAQ. So the new symbol will be CLOV. Those shares are expected to keep trading as IPOC through the 7th, so tomorrow. So the earliest we would see the new changeover would be on the 8th, which is Friday. So keep an eye on IPOC and the new symbol CLOV going forward as that vote is expected to pass. But remember, we cautioned, chasing this one into that merger vote date as it had a lot of attention and was already starting to pull back. Up next, we have STPK. So this is the SPAC bringing STEM public. Had some news yesterday that we didn't cover on the show, so I want to make sure we get it out there. So STEM and their partners were awarded 68 milliwatt hours in new smart energy storage projects in California. So again, STEM is a energy storage solution. They're one of the leaders in California. This is one I like long term. Going to be doing some more digging into it as I like the story here. So definitely, keep that one on your watch list. And then up next, we have sports betting SPACs. So DraftKings, DMYD, which is merging with Genius Sports, and RSI, Rush Street Interactive, are the three I want to highlight. So New York sports betting looks like it is now a win, not an if, with Governor Cuomo getting behind the passage. And it looks like he's going to cover sports betting in his State of the State address. We talked about this before. Remember, this is pretty significant because Cuomo was actually seen as the block to getting legislation passed there, and now he is on board. So I saw a tweet today talking about the New York winners. Big winners here could be MGM, DraftKings, FanDuel, and Rush Street, as they already have existing retail deals in place. And then also remember DMYD merging with Genius Sports. So we called it the thing behind the thing, providing data to sports betting companies. They could win, as I see a rush to secure new licenses in that state. We could see some new casino names pop up for sports betting. And those companies, of course, will need the data that is provided by Genius Sports and Sport Radar, the two companies in that sector. New York's one of the top 5 most populous states, so this is a significant news for the sports betting market. Then up next we have Skills, so SKLZ. Covered this one on the show yesterday. Of course, the big headline is that Kathy Wood added Skills to the ARKW ETF. Purchased 215,000 shares on Monday. Yesterday, she bought another 244,637 shares. So now almost 500,000 shares owned in ARKW. That ETF is up over 148% in the last year and a top performer. She's had 3 SPACs in those ETFs. They've all been pretty good, strong performers. Up next, Cannabis SPACs. So Weed Maps merging with SSPK. And Clever Leaves merging with CLVR. Cannabis is going to be a big story with the election moving forward now. Both of those are up double digits. Clever is trying to get back to that $10 level again after falling post-deal. IPV was the top gainer yesterday, up 9%. And remember, they got that funding from a group that has ties to some Apple veterans, so keep an eye on that with the Apple electric vehicle rumors. And then no new deals today, but we did have a pretty strong rumor. So ACEV, Ace Convergence Acquisition. Bloomberg is reporting that company is nearing a SPAC deal with Acronic Semiconductor. So keep an eye on this one. It was up pretty big last night and after hours and up big in pre-market, but now starting to trade, down up about 7%. So normally when we get these rumors from Bloomberg, the definitive deal gets announced a month later. So keep an eye on this one. And then lastly, we have NGA, so merging with Lion Electric. We've talked about this one a lot. We had the Amazon news this week. It was one of my top 10 SPAC picks for 2021. I am long shares of NGA. Stock is up double digits as it was reported that the CEO will be on Mad Money with Jim Cramer tonight. This is an exciting play here. This is one I really like long term. Make sure you do your own research. We are excited. We're actually going to be bringing Lion Electric on the show next week. So again, Cramer tonight and then SPACs Attack next week. So keep an eye on this one and we'll be bringing you more information going forward. So that's what I've got for headlines, Mitch. I got to ask because I saw it brought up in the chat. There's still that giant Christmas tree behind you. So what's going on there? Oh, looks like you're on mute.
The good old mute trick. All right, so one of the things that I've been working on, guys, and why the death till Christmas didn't come was that I've been working on getting a new house. And I've been kind of looking in the market and kind of things like that. So I've been doing a little house hunting on the side. Gonna get an office soon and excited about that and big things coming for SPACs in 2021. Now, one thing I can mention about this NGA, I think we talked about this the day that it started right here on the 4th, when it started kind of gapping up here and pushing towards this $20 level. We talked about if we could get a close above that $20 level, it could continue moving on up. And I think that's kind of what you saw here is that good volume day, getting above that resistance, that $20 here. And then what that gave it is that gave it that little support right here on this pullback day. And then you got that pullback and immediately with good catalysts like it being on Cramer, you're seeing it right back up, getting pushed there to the 24s. Now the question is the Cramer move pushed already in here? And so that's one thing you got to tell yourself if you're kind of looking at this stock today. So it's going to be really interesting. We're going to have them on also, so super excited about that, guys. So definitely smash the like. That's what we do here on SPACs Attack, is that we try to bring you guys the experts and the executives that you guys want to see in the industry, so that at the end of the day, you guys can get your informed trades. And that's what we really do here on SPACs Attack. So I'm really excited. One of the things that we do is also bring, information from outside sources that we feel, can be kind of not only like listened to and the information is accurate, but also representing the SPAC industry in the right way. So really excited to bring on our next guest. Chris, let's go ahead and bring him on here. You can introduce.
Yeah, perfect. So, guys, I'm excited today. We have Jonah Lupton with us. So if you're not following him on Twitter already, we're going to drop his Twitter handle in the chat. He's got over 480,000 followers. Definitely one of my favorite followers on there. So after spending more than a decade in the investment industry, Jonah is now building companies, now has transitioned back into the investment business. He manages stock ideas in a stock Twitch room. He writes a weekly newsletter, and he has some more interesting projects launching this month and possibly launching an asset management firm later this year. And he has an exciting 2021 stock picking contest that we're going to talk more about later on. So, Jonah, welcome to the program.
Thank you for having me. I appreciate it.
Welcome on the show. Excited to hear some of these SPACs. So we'll go ahead and get right into it. I'll let Chris take over, and I'll probably jump right back in a little bit.
Okay.
All right, perfect, Jonah. So we're going to dive right in to the SPAC coverage here. So up first, I want to talk a little bit about STIC. So merging with Bark, parent company of BarkBox. A lot of comparables to Chewy, which has been, a hot performing stock during the pandemic. I know you wrote a piece on the Bark deal. What's kind of the short overall bull case for this SPAC going forward?
So, I got into SPACs probably back in April or May when we got the DraftKings deal. Since I'm a Wall Street veteran, I don't know if that's the best way to classify me, but I remember when these used to be called blank check companies, and there were some shady ones along the way. And then I think over the last couple of years, you've seen an abundance of high quality sponsors, investors, and entrepreneurs get behind this SPACs. And I think we're seeing just a ton of interesting companies coming public now through the SPACs that otherwise we wouldn't have a chance to touch for 3 or 4 years, because these companies would stay private and go raise a D round, an E round, an F round from the late stage VCs. And by the time us, meaning us, the retail investors, got a chance to touch these companies, they'd be, the valuations would be 5 times higher than they are now, would be accelerating. And I think we have a chance now to jump into some really interesting high growth companies that are still in that, that early trajectory, and get in early and almost replace those late stage VCs. So when my Substack newsletter I've been doing for probably 4 or 5 weeks now, and I've kind of morphed it into a weekly newsletter where I'll pick 2 stocks every week and I'll do a deep dive on them. And actually the first stock that I put into that newsletter, I think it was 2 weeks ago now, was STIC. So STIC will become BarkBox. I believe the merger date is, I forget, I think it's late February or early March. So we still have a couple months to go. A lot of people know Chewy. I have friends that love Chewy, but Chewy is now a $45 or $50 billion company last time I checked. They had a phenomenal year, but BarkBox to me is almost like a mini Chewy, but it's a different business model. And I do think that BarkBox will eventually morph into a Chewy in terms of offering more than just their boxes, which are typically treats and toys. But the big difference, so it's a subscription model. They have different types of boxes. They have their tough toy box, for bigger dogs that are going to be a little bit rougher and rip things apart. They have their Bark Bright, which is like their teeth cleaning system for dogs. That's another box or another subscription. But then the main one is their BarkBox subscription. And I have friends on Instagram and Snapchat. Every month when that box shows up, they post a video of them opening up that box with their dogs, and it's a big event. The dogs go crazy. And what BarkBox has done over the last few years is transition from a subscription service that just sold other people's products or put other companies' products into those boxes to now being a full-fledged manufacturer where they have all the data to help them determine which toys and which treats are the most successful based on, customer feedback. And then they can manufacture those products themselves. So they have much, much higher margins than they did just a few years ago, which is kind of the big differentiator between them and Chewy. So BarkBox's gross margins are around 60%. Chewy's gross margins are somewhere in the 20s. And that's because Chewy is just a, more or less a distributor, a logistics company for other people's, pet products. So I prefer the BarkBox model where it's, they have over 1 million paid subscribers. So every month, that is just guaranteed money coming in. They have a 95 or 96% retention rate. And now they're going to, they'll keep adding these new services as they get feedback from their customers and figure out what those customers want. And at the end of the day, subscription services have taken off over the last few years. I think we've seen some carnage in the industry, some of these ideas that just never really picked up any traction. But with, I think it's 100 million households in the US having a pet, a dog or a cat. I'm curious to see if they transition into the cat industry, so rather than just sticking with dogs. There's 100 million cats out there too, or somewhere in that neighborhood. I think people do spend more money on their dogs, but it'd be interesting if we got like a cat box or a meow box or something at some point down the road. And then they got into more, of Chewy's main business, which is, shipping, larger quantities of product so that people never have to walk into a brick and mortar store. So I think it's early stages for the company. I think there's a ton of growth potential down the road. Of course, they could always get acquired because it's still a small company, under 2 billion enterprise value. But we'll see. I think it's a very interesting company and kind of fits, what I'm looking for in my growth stocks.
Awesome. Yeah, I know when I looked at it, that retention rate for me was really, a big key. And then, hitting over 1 million subscribers, earlier this year. But, I'd like that commentary on, the cat box, because I think that's an undervalued catalyst here, unintended, I guess, on catalyst, that, what's the potential if they do add, additional pets? Because right now, just focusing on dogs, but they really have, a big lead there in that dog market. So, yeah, I'm definitely keeping this one on my watch list, and it's one I think, like you said, in the early stages of growth.
I think a lot of people, a lot of households that have dogs also have cats. There's definitely some crossover there. So maybe it's 50%. I haven't actually seen the numbers. I'm sure I could probably Google it and find out, but that might be a potential, revenue driver in the future, is getting into the cats too.
Yeah, perfect mentioned. I'm one of those people, so you can mark me down as one of those households, dog and cat. So
there you go.
I definitely agree. I myself have looked at the BarkBox before the SPAC, so definitely just to kind of give you some recognition on that. This is something that I think all pet owners have heard at least about. And at least know the options there. And I think that's very important, in a COVID environment, when you're getting pet supplies delivered to your door, that's always going to have an advantage.
So I'm just looking at the price right now. So STIC, which is going to be Bark, is trading at 1504 right now. I put it into my newsletter a couple weeks ago, I believe at 1240. So let's see. Okay, so it's up 20% since then. But I think I know it did spike after it went into my newsletter. It spiked up to like the 16, 17 range and then came back down. And then I believe the CEO of the company was on CNBC and the stock spiked again up into the 18 or 19 range. I think I might have trimmed a little bit, but down here at these levels, I still love it. I think it's undervalued at 14. And don't underestimate the value of a company going public and all the extra exposure that they're going to get from, just being a publicly listed company. So once that ticker changes over to Bark and people, all these investors and analysts start putting out reports, that's a lot of people that now learn about this company and then go, oh, wow, that's a cool service. And, test it out as a customer. And, obviously that 95% retention rate speaks for itself. So I think the future is very bright for this company.
Awesome. I want to dive into a former SPAC and one that you hold in your portfolio. So Tattooed Chef, so symbol TTCF now. This one's kind of been a mixed bag as far as people's opinions on it. Is it a fad with the plant-based stuff? Can it keep up the growth? Is it the next Beyond Meat? So I know they had an investor presentation not too long ago. The big news, those deals with Costco, Sam's, and Target, and launched e-commerce. So, was there anything in that investor presentation or maybe some 2021 catalysts that really stand out for you with Tattooed Chef?
So I used to own Beyond Meat because it was kind of the only pure play way to, invest in this new vegan / plant-based food craze. And now we have Tattooed Chef as well. And there's others, there's some other food conglomerates where you can invest in it, but it's a much smaller piece of the business. For Tattooed Chef, I mean, this is exclusively what they do. It's also leaked out recently that they're doing private labeling for both Trader Joe's and apparently Whole Foods as well. But I think you nailed it. I mean, I think this story goes, the growth story going forward is a combination of e-commerce, but their big retail partnerships with Target, Walmart, Sam's Club, and a few other giants, and then obviously getting more, shelf space in the freezer sections at your big grocery stores. I forget who it was. One of my friends told me that it's now in their grocery store somewhere in the Midwest. I just forget the name of the retail chain, but I mean, it's sort of the same thing as my Celsius. I mean, I've been a big bull on this company for the last 3 or 4 months. I did miss the bottom back in March when it was a $3 or $4 stock, but I think I've doubled or tripled my money since I got in. And it's, their story is sort of the same thing. Great product, but it's all about getting shelf space. And for Tattooed Chef, that's going to be the ongoing struggle is getting that freezer space, which is in high demand by a lot of bigger companies.
Awesome. So another SPAC that you own in that portfolio, so CFII, merging with View, which is a smart windows company. So I think people were surprised when this deal was announced, just because there's not a lot, of information out there about smart windows and what the potential would be there. So, I'm wondering here, we talk sustainability, we talk Biden plays, is that the bull case? And then also, does less people working from offices now during the pandemic, does that kind of hurt the timing of this deal or the long-term potential?
So, I mean, my strategy with SPACs is if I like the deal, I like the sponsors, I like the valuation, I can take a quick look at the numbers, the investor presentation, everything on the, the outside looks good. I'll typically start a small position and, my portfolio is updated daily by me. It's viewable by anybody. It's pinned to my my Twitter account. So my top tweet is a link to this Google Sheet, which is my entire portfolio. So you can see all my positions. And if you scroll down to the bottom, you'll see that's where I start off some smaller positions with a lot of my SPACs. So CFII, which is going to be View Glass. If anybody's interested, the website is view.com. NGA, which is going to be Lion Electric, the truck company, which you were talking about before you brought me on. BFT, which is going to be PaySafe, and a couple others. So, these are still small positions. I mean, they're all under 1% right now in my portfolio. And then as I continue doing more due diligence, as I become more comfortable with the position, the company, the growth prospects, I will increase that position. For instance, DraftKings started off in that 1 or 1.5% range, and now DraftKings is a 3.6% position, which is clearly working out well today with the news from the state of New York and Governor Cuomo possibly getting behind sports betting. But so back to View. So I've known View for 3 or 4 years now. For people that don't know, I used to run a company called SoundGuard. I mean, technically I still do. I created, or at least my chemist and I created, a soundproofing paint that you would spray on shared walls in hotels and apartments and help reduce the sound transmission. So we spent the last 2 or 3 years going out and talking to as many developers and architects and designers as we possibly can. And View Glass was always a name that I heard about. So, I mean, I'd sort of done my due diligence on the company before this merger was announced. Now, I will agree, they need new construction to come back, right? Because their product is not a retrofit product. You are not going to rip out all the windows in your building to install their smart windows. It really has to be done from the ground up, new construction, spec'd in by the architects and designers. So for this company to really win going forward and really continue growing, they'll need, hotels, hotel new construction to come back, multifamily new construction. Well, the multifamily is not really that big for them. It's hotels, it's office buildings, it's airports, it's, universities. Those are really the markets that they need to come back. But it is sort of a green play, energy conservation. So if you go on their website, there's a ton of data. They talk about what the installation cost is for their windows, which is clearly more expensive than traditional windows. But over the long term, that building owner will save a ton of money, with energy savings, heating and cooling, as well as not having to purchase, ugly blinds and shades and whatnot, because the windows are going to, tint themselves. So there's absolutely a green or energy savings component to it. Now, whether or not that fits into, the new Green Deal, I'm not really sure. Whether or not there's going to be big tax credits for companies to use these windows. I don't know the industry well enough yet to comment.
Perfect. So then one that we hit in headlines today that I know is in your portfolio, SSPK, so merging with Weedmaps.
Yep.
We talked about this the day the deal was announced. We like it, as not a direct cannabis play, but the logistics, the thing behind the thing, as we call it here at Benzinga. Obviously cannabis, it looks like it's going to be a big story in 2021. So, what's the story with Weedmaps all about?
So I'm still somewhat new to the cannabis industry. I've been in it now for probably 5 or 6 months. So the first 2 cannabis stocks I owned were GRWG, which is Grow Generation, which is more of a commercial retailer selling growing supplies for the most part. And then IIPR, which is Innovative Industrial Properties, which is more or less a cannabis REIT. So they're renting out space to other cannabis companies. And I've exited the IIPR position. I still have a nice position in Grow Generation, which is up 12.5% today. So that's great. And then SSPK, like you said, which is going to be Weedmaps, that's up 15% today. So obviously, what's going on in the politics right now is looking good for these 2 stocks. So like you said, there's so many different ways to play the cannabis industry. There's the replay, which IIPR, I'm not interested in anymore. There's the growers, there's the brands, there's the sellers, and then there's Weedmaps. And I like Weedmaps because the comp, or the comparison that I use, it's sort of the Google/Yelp of the cannabis industry, as well as a SaaS play. So they also have a SaaS solution for cannabis retailers. So, this company should have very high gross margins. This is more of like your traditional asset-light company, which I like. So I always talk about, I like founder-led asset-light companies, and Weedmaps certainly fits that mold. So, you're looking to purchase cannabis or read reviews on different, strains or brands or, local retailers, Weedmaps is where you would go to get that information. So, and then once Weedmaps has that traffic, there's 100 different ways for them to monetize it.
Awesome. So then another former SPAC, MP Materials. So we had the CEO on our show to do an interview. I love the long-term story, the rare earth minerals. He talked, in the future being able to sell to companies like Tesla direct, rather than through partners right now. So, what's your overall take on MP Materials going forward?
Yeah, it's obviously it's a play on rare earth. So MP used to be, I forget the name of the company that basically went bankrupt, and then it got purchased and kind of reorganized now as MP. And I believe Chamath put an investment into the company, which helped put them on the map. We all know that electric is here to stay, right? The electrification, that's a tricky word, of the entire auto transportation industry is not going away ever. Just look at companies like Lion Electric and obviously Tesla, and I mean, then you get all the overseas companies like NIO. But just in the U.S. alone, I mean, Ford and GM and every other auto manufacturer is, putting a lot of resources behind electric. So, rare earths, and this, this is complicated stuff. I mean, I've done some research on this. There's actually 17 different rare earths, and they're all used for different things, from batteries to transistors, and it gets, some of this stuff is over my head. But, if you believe in the, the future of electric vehicles and drones, and I mean, go on and on. I just believe this is a company that is worth owning. Right now, the majority of the world's rare earths do come out of China. So I'm hoping that over time, U.S. manufacturers will, turn that buying to U.S. companies that are taking those rare earths out of our soil, and, keep that money in the U.S. rather than shipping it off to China. So, and then there's other rare earth supplies. I think Australia is the second largest behind China. And I believe, MP is one of the only spots, if not the only spot in the U.S. that's actually taking rare earths out of the ground. And I mean, I can't even pronounce the names of the rare earths. I mean, if you go and Google what are rare earths, I mean, you'll see the results, and, these are tricky names to pronounce.
All right.
I sold all my Tesla. So I was in Tesla, since earlier this year, kept buying it all the way up. And then when they announced that they were getting added to the S&P 500, the stock was around 400. I think it was a 5 or 6% position at that point. On that news, I ended up tripling my position the next morning when it opened at 440. And then I exited that entire position in Tesla a couple weeks ago in the high 600s. So I think between 660 and 700, I sold all of that Tesla. But now I'm looking for other ways to play the EV. So NIO is one of my positions. NGA is another position. FUV is one of my most speculative positions. Arcimoto, which is they make these these electric 3-wheelers. If you look at them, I think they're meant for. So I'm still learning about the company. I've actually DM'd with the founder. They're going after the delivery companies, but I'm trying to figure out where are they actually delivering. I mean, in my suburban town, I'd be a little shocked if delivery drivers are whipping around in those. So it's probably for cities, or I can see those things on golf courses, campuses. So, I mean, there's probably a million different uses for them that I'm not even thinking about, but that is a more speculative EV play. And then what else I'm in? I think I have 4 altogether. NIO, FUV.
So one area that we haven't talked about, and we can get into, is we've been seeing DraftKings and a whole bunch of different players get into sports gambling and that kind of industry. Why do you think you like DraftKings here, and why do you think you are interested in this industry overall?
I mean, so a couple reasons. One, all my friends do sports betting. Most of them also do stocks. But I mean, sports betting is just a monster industry. And I do think so. The two plays right now are, cannabis and sports betting. I kind of put them in the same boat with regards to tax revenues needing to have to be created in a lot of these states. They're going to hit, budget shortfalls in the near future. So, the damage that's been done to the hotel industry, the restaurant industry, and a bunch of other industries because of the pandemic, that is going to create a lot of pressure on these states to increase tax revenues. And I don't think they want to do it through, increasing the state income tax or property taxes or, sales taxes or anything like that. I think they would rather do it in industries like cannabis and sports betting. So I think we're going to see more states legalize these two industries. I mean, these two industries have been around for decades. They've just been sort of underground, done illegally, not regulated in any way, obviously not taxed in any way. So rather than let the drug dealers run around and sell weed and pocket the cash, and, a bunch of bookies make money on sports betting, if it's going to happen anyways, I just would rather see it legalized and regulated and taxed and done in a, a safer, more efficient manner by companies like DraftKings. Now, in retrospect, I guess I should have gone with Penn Gaming, because Penn Gaming has been the better performer this year, thanks to Barstool Sports and David Portnoy and, all the assets that they have to help generate customer acquisition. But, what's done is done. And I think going forward, I would rather be in DraftKings as the more, pure play in the space. And they just have, they have a longer track record. They have much bigger corporate partners, with companies like ESPN. So, Barstool Sports is a phenomenal, asset. And that was just ingenious by Penn Gaming to acquire them when they did. I can only imagine what DraftKings would be trading at now if they had bought Penn Gaming and they had that Barstool asset, driving traffic and customer acquisition. I mean, DraftKings would be $100 stock right now, easily. So, and I think that's where DraftKings has the potential to go over the next 12 months. If companies like New York come through and legalize sports betting, I think DraftKings could go to 100. So,
yeah, I mean, I can't see you not even looking at that play, because at the end of the day, with states, continuously moving towards that revenue has to go somewhere, right? And so the market share is going to be all about who's grabbing what market share and how much really are they going to grab.
Right.
I know I've been watching GAN. That's kind of the ones I like, just because it's kind of like we talk about the thing behind the thing, and I always talk about how maybe if I wanted to start a platform, who I'm
Right.
calling first to try to get some experts into the platform. So yeah, that's kind of the plays that I'm looking at, and there's a bunch of plays in here. I think you're right in what you mentioned. Yeah, maybe Penn has been the best performer, but long term, I think we're going to pay attention to a lot of what you mentioned: customer acquisition, how they're really paying for their kind of their platforms, and also what kind of advantages does each platform have.
Right.
That's one of the things that we'll definitely pay attention to. I know Chris has something to mention now, and we'll keep going. But like always, guys, if you guys want to know a little bit more, check in the description below. Jonah, we have all those links up there. Check out the Substack and everything. You guys can check it out in the description down below. All right, Chris, go ahead.
Yeah, so we brought Jonah on today to talk about SPACs, some of the ones he owns. I know we could go on, all day probably about some of those positions, but I want to get into this contest that you put on. So almost 500,000 followers on Twitter, and you decided to launch this stock picking contest. So I'm going to drop the link in the chat. If you just want to kind of talk about, this contest, the rules, and then I know we have a 4 p.m. Eastern time deadline today for people to pick those stocks. So just kind of tell our viewers about, how they can get involved with this contest.
Sure. Thanks. So about a week ago, I saw a couple people posting about, running their own smaller stock contests, for bottles of tequila or $50 gift cards at their company. And I just thought, okay, FinTwit has gotten so big and so engaged over the last 6 months. And there's so many people that I love talking to every day. I spend half of my day on Twitter talking about stocks with people that, I've never even met in person. I mean, these are still just, Twitter friends for the most part. But I just thought that, myself and a few other people could really get behind a bigger contest. Not only would it be fun, but I also think there'd be a lot of value and education to it, where we would get a chance to see what stocks other people were looking at or super bullish on. So originally it was going to be an annual stock picking contest, like most of them are. So you pick your stocks, in the beginning of January, and then at the end of December, you have a winner and they get a prize. And the problem with that is, as FinTwit continues to grow, and I'm launching a couple projects which will gain some traction and exposure as well. All the people that find out about this contest after the beginning of January wouldn't have a chance to get in, and they have to wait 11 and a half or 12 months to get in. And I just didn't think that made any sense. I also thought there'd be a lot more value for sponsors if we could continue to grow, the number of participants, more often. So I decided to change it into a quarterly contest. So, just like the, first quarter, second quarter, third quarter, fourth quarter. So we're going to start this contest this week. I guess in retrospect, I should have gotten behind this idea maybe a week earlier, so I could have had the deadline Sunday night, so that Monday morning would start the performance numbers for the first quarter. But I didn't think about this until last Wednesday. I wanted to give people a full week to come up with their ideas. So we're doing the deadline today at 4 p.m. Eastern time, no exceptions. And then tomorrow we'll actually post the spreadsheet or the leaderboard with everyone's picks. So when you go to the website, which is fintwitstockcontest.com, you please read the rules. There are a lot of rules. There have to be, just to protect ourselves. So, everything is super clear. What's eligible, what's not eligible. Stocks over $3, stocks over $50 million market cap. You can't pick ETFs, none of that stuff. And like I said, the performance numbers for Q1 are going to start with the closing prices today at 4 p.m. until March 31st at 4 p.m. And then on March 31st, we'll tabulate all the numbers, and then we'll have our first, second, third place winners. So I will say that the cash prizes that are on the website now are actually a little bit higher. I was able to lock down 2 great sponsors. So Public and TrendSpider are our 2 main sponsors, actually our only 2 sponsors. So they're both putting in $2,500. I'm putting in $1,000. So that takes the pot up to $6,000 for the first quarter. So we're doing $3,000 for first place, $2,000 for second place, $1,000 for third place. And hopefully if this contest gets even bigger or there's even more excitement and enthusiasm, going into Q2 when we start fresh, then hopefully I can bring even more sponsors and create even a bigger, set of cash prizes for everybody. So, fortunately, anybody that finds out about this contest after today at 4 o'clock won't have a chance to get in. But what they can do is come back to the website in the middle of March and put in their picks for Q2. So probably I'd say the third week in March, we'll put up the new form for Q2. The rules will probably be, almost identical. Maybe we'll learn a few things along the way. We tweak the rules a little bit, but for the most part, it'll be 3 picks, average performance across those 3 picks, over the quarter. And then we do the first, second, third place. But I am hoping, right now I think we're at like 33 or 3,400 submissions so far. And so let's say we end up with close to 4,000, for Q1. I bet we can double that for Q2. So I'm excited. I think people are pretty pumped about this. And, like I said, you can come back to the website on Thursday afternoon or Friday, and you can click on that leaderboard button that's on the website, and it'll open up a Google Sheet with all 4,000 rows of picks. So you'll see everybody's first name, you'll see their Twitter handle, which is a requirement, and then you'll see their 3 picks, and then the starting price, the most recent price, the performance of each, and then the average performance. Yep, there you go. Perfect. So we're trying to make this as transparent as possible. There's no tricks or gimmicks or anything. And, if people are looking for new stock ideas, coming back to this leaderboard on a weekly or even daily basis should give you some ongoing ideas. Personally, I haven't even put my picks in yet because I wanted to see how, I had 7 or 8 stocks that I was thinking about, but I wanted to see how they traded these last 3 days so that if they had a big run up, CleanSpark was going to be one of my picks, but it's up 20-something% today. So now I'm not sure I want to put it in there. Futu, which I was super bullish on, which I wrote about in my newsletter last week. Futu's up about 40% since I put it in my newsletter last week. And a lot of people picked that. But for the people that picked it last weekend, that performance of Futu on Monday, Tuesday, and Wednesday is not going to count towards their Q1 performance. So I'm sure they're going to be annoyed, for people that didn't read the rules close enough. They're probably going to feel like they got gypped, but it is what it is. Like, people can blame it on me for not starting this competition Monday morning like I wish I had, but I wanted to make sure that I got as many people in as possible, which just creates more value for the sponsors. And since they're putting up all the money, I had to do what was fair for them.
Yeah, definitely. I'm going to take a look at it myself. Everyone, I think, everyone at the beginning of the year starts trying to kind of pick the stocks that they're looking at towards the beginning of the year and also for the complete year overall. So definitely a great contest. I'm sure that everyone will be jumping in there. We put the link in the chat there. So if you guys can click that URL and get right to it.
And
all right.
SPACs do count.
Whoa, you guys hear that?
Yeah, so SPACs count. So what I'll have to do is I'll have to keep track of when SPACs switch over their ticker symbol, and then I'll have to go in and manually switch it over. But we'll have to, keep the starting performance, price the same, right? Because if the SPAC price is, let's say, $14 today at 4 p.m., obviously that's going to be the start price, not when the ticker symbol switches over. So, well, I mean, the good thing is that because it's only a quarterly contest, I have another 2.5 months to figure all this stuff out before it really matters at the end. And I think what the two sponsors are doing is they're going to do like monthly giveaways. So whoever has the best performance at the end of January, I think TrendSpider is going to give a free annual membership or subscription. And I think Public is going to give away like a whole bunch of swag and some free stocks and stuff like that. So I'm excited. They're both two phenomenal sponsors. If people aren't familiar with them, public.com and trendspider.com. So.
Yeah, definitely. We'll definitely take a look at it. Like always, guys, we have that link right here in the chat. So check it out, guys. Thank you for joining us, Jonah, and we'll bring you back another time.
Sounds good, guys. Have a good one. Thanks.
Thank you, Jonah.
All right, guys. So like always, guys, one of the things that we do is try to bring you guys, the people that we really feel can bring value to you guys. At the end of the day, we don't want to bring anyone on here that we feel cannot get you more informed. And that's really what it's all about here on SPACs Attacks, is to give you guys the information that you guys need to make those informed trades. We didn't get to a ticker time today, so definitely going to work hard on getting an extended ticker time tomorrow. We're gonna work hard. We'll at least leave half the day, if not the full time, towards ticker time. So definitely join us up tomorrow if you guys want to go ahead and check some of these SPACs out. I'll be looking at it for myself from my own portfolio. And Chris, anything you want to leave off with?
No, a big shout out to Jonah, for joining us on the show. We love getting some outside opinions and some research into these SPAC names. So I think that was great content, and based on, the chat, it looks like a lot of you got some value out of that. So again, you have till 4 p.m. Eastern today, enter that contest. It's free to enter. You pick 3 stocks and they can be, SPACs. So, we're looking forward to that. And the thing, Mitch, I'm excited about is that all those picks are going to be shared publicly. So we can see, who's picking what, and maybe get some new trade ideas, and maybe see what some of the most popular SPAC picks for the first quarter and for 2021 are out there, and compare them to the ones that we talked about on the show. So I'm pretty excited about that contest that Jonah has.
Yeah, definitely. I'll check it out, guys. And like always, we had some great mentions today. We talked about, TTCF. We talked about the vote today, IPOC. We talked about some cannabis plays. I know a lot of people ask about cannabis SPACs, so definitely rewind and check those out. We had the Weed Maps deal, and we have some other deals in there, so definitely check it out. Another thing that you got to look for is I'm looking for solar SPACs. I don't know if you want to mention any of these, Chris, that are out there right now.
I think so. ACTC is one that we talked about as a Biden play, with one of those executives coming from Sunrun and being on the Biden clean energy transition team. That's one that's on my radar. But yeah, there's a couple sustainability kind of clean energy ones that loop together with solar and some other stuff. I definitely think that's a way to pick in 2021.
Definitely, guys. We'll definitely keep up with you guys. Like always, smash that like button down below. We'll see you guys next time on the SPACs Attack. Like always, we'll continue working hard. Say goodbye to the tree, and let's get going with the SPACs Attack.